Hey guys, this is Julie. On Wednesday, I'm going to show you this strategy. It works out pretty good. This is ES using a 30-minute time frame. So we can do this on multiple time frames, and I'll show you that in just a second. So start out with a 30-minute strategy and using one contract to trade to a percentage of the 30-minute range using JATS as the profit target and stop loss. So I'll show you how I do this on Wednesday in training. And the middle one is increasing the profit factor um, significantly by adding a second contract to order one. So reach the quicker target first, and that helps significantly. So on our percentage of ranges, we're not going for the full 30-minute range on the first contract. We're going for a percentage of that range. So hit the percentage, and then we can manage order two going for the full percent several ways, and I'll show you how to do that. If the first order is stopped out, then we can cancel and close that second order so that it's not continuing to try to reach a range that's already broken. And also, we can trail. So if the first order profit target is reached, then we can trail that second order stop loss up to the opening um, order, um, and put a little extra ticks on top of it so that you have a cushion. I'm using a 2 point cushion, so when profit target one is reached, that second trade trying to reach the full 1% of the 30-minute range, or 100%, 100%, sorry. I always think of ones instead of 100. But 100% of the range, we can make sure that we adjust that in the trailing rule also, um, that once the profit target of the first order is met, we trail up that trail to the opening of the position plus 2 points. That way we're always paid. So once that profit target one is reached, we're going to be tightening the stop on that second order. Um, Once it reaches 2 points, it'll move up and take profit. So the third row is adding four contracts on A and one contract on B. So that first percentage of the range, instead of just trading the one contract or two, we can put four on it and increase the profit factor again. And you notice that the percent profitability stays the same. And we get more money by doing it this way. So four and one. Why am I not spreading out and adding, two or three contracts on that second leg? Because I've tested it, and we'll go through that. It doesn't really increase it that much. The gist of all this is to hit the low hanging fruit, right? Once you get, a signal, your logic, your trade logic set up, then go for the side of the barn. You don't want to try to hit the top of the barn, right? Hit the side of the barn, get paid, and get out, right? Ring the register. So these are for the 30 days. It would be nice to be able to get 36,000 in 30 days paying the ES on five contracts, right? So how is the logic constructed? It's again using JATS PT in several different methods, by using the range of the 30-minute dynamically set the session dynamically on whatever that range is happens to be. It'll do the calculations for you and adjust the profit targets accordingly. And I've set up this logic so that when the faster range expansion is outside the normal average range expansion, that's showing that opportunity for that thrust. So often you'll see that Um, range will go back inside the main distribution, and anytime it's in here, it's subject to just go up and down. You're not really going anywhere. But once you go outside, again, it's direction agnostic. You have to put something in your logic to be able to tell it what direction to go. And I'll show you how to do that. Um, and then you can create your own other filters um, that you would like to create, time, um, and your own distances. You may not want, you know, these distances that I'm showing you. So I'm just giving you examples of how to set this up so that you might be able to start making money from the market. And no better way to do that than, in my mind, wait for the range to be expanding. Because once it's expanding and you get the direction right, you can take that forward progress. You don't want to enter a trade, have it go up a little bit, and then go back in the distribution, right? Here it went back to the distribution and then took off again. Um, there are interesting things that we can talk about, like hitting the mid band of that distribution to go back in the direction of that range expansion should it occur. Um, but this is just a simple enter on the market order. Instead of, we can place trades to hit when they hit the volatility levels as well. So I will show you that. So just using really simple techniques, range expansion to give us that leg of when it's going to go down. Now, like I said, you can do this on multiple time frames. That was a 30-minute, so we can do it on a 15-minute as well. And I'll run that for us. And you see that the 15-minute is even better, and easier to hit, right, than that 30-minute. So that looks really good. And again, this is using I think, four contracts on A and one on B. So, all right. You would have a nice little month. Maybe get that Bugatti, right? That red Bugatti. That would be nice. All right. We'll talk to you later.